Hello friends, in this video we will discuss PIB articles summary for the articles published on from 26th to 28th January 2018. These articles have been selected keeping in mind the syllabus of RBI Grade B and NABARD Grade A and Grade B 2018 exams. So let us discuss these articles in bit detail. There are two topics for our discussion in this video. The first one is that small finance banks and payment banks are allowed to offer Atal Pension Yojana, and the second topic is a Pulse Polio program has been launched for 2018 year. Small finance banks and the payment banks are to offer Atal Pension Yojana. The outreach of Atal Pension Yojana is being expanded by allowing small finance banks and the payment banks to offer this particular Yojana. Earlier, only the public sector banks or the scheduled banks were allowed to implement this particular scheme. Now let us briefly discuss about the Atal Pension Yojana, which is an old age pension scheme. Under this scheme, for every contribution made to the pension fund, the central government will co-contribute to the extent of 50% of the total contribution, or ₹1,000 per year, whichever is lower out of these two, that is 50% or ₹1,000. Will be deposited by the government to the each eligible subscriber account for a period of 5 years, and for subscribing to this particular Yojana, the minimum age is 18 and the maximum is 14 years. So a minimum of 20 years period is required to contribute towards this pension scheme, and in order to get benefit of this scheme will begin at the age of 60 years in terms of pension to the subscriber. The subscriber is required to opt for a monthly pension of ₹1,000 or up to ₹5,000 based upon his contribution in the period for which this Yojana is being subscribed, and the payment of this amount will be regular provided the person has contributed his part along the period for which the pension Yojana is being taken. This scheme has replaced Swavlambhan scheme. This scheme has been replaced by Atal Pension Yojana, and the scheme is being administered by Pension Funds Regulatory and Development Agency, PFRDA. Now let us discuss about the small finance banks and payment banks. These are the new models of bank that has been conceptualized by RBI, or the Reserve Bank of India. These are basically currently 11 payment banks and 10 small finance banks have received the license from RBI to start the banking operations in India, and these banks are basically to improve the outreach of banking services to make financial inclusion more penetrative in the country. And also now they are being utilized to increase the outreach of Atal Pension Yojana. Now let us discuss the difference between the universal and differentiated banks. Universal banks are normal banks, for example the public sector banks or the scheduled banks, which offer the entire gamut of banking services to the public. However, the differentiated here banks are those which offer their services, the banking services, to a particular segment or target group. For example, we can say that a particular bank just give loans to only the scheduled tribes people, or it gives loans to only the only agricultural loans. So this will be very particular, and it will not target towards other sections, other segments, but only the one it has chosen. So it will be differentiated with respect to the universal banks. So the examples of such banks are the small finance banks and the payment banks, being conceptualized by the RBI. These differentiated banks are also called the niche banks, which means they serve the needs of a certain demographic segment of the population, and offer a kind of limited services to that particular target group only. The policies or operations or the offerings of the banks are basically targeted towards the target group and tailor-made for the benefit or as per the preferences of the target market. Now let us discuss briefly about the payments bank and small banks. The small finance banks are like universal banks. They offer all the services being provided by the normal universal banks. However, they are smaller as compared to the universal banks in terms of their area of operation, in terms of capital and other requirements. So their area of operation or working is very small as compared to universal banks, and therefore because of their small size they could cater to only a small segment of the society and not the whole one. So that is why they are named as small finance banks and are categorized as differentiated banks. These banks can undertake normal banking, basic banking activities with acceptance of deposits, as well as giving loans or credit to unserved and underserved sections of the society. For example, the small business units, the small and marginal farmers, etc. These can sell the forex to customers, sell mutual funds, insurance and pension services. These can convert into full-fledged bank when they meet the requirements to get converted into the full-fledged banks, and they can expand across the country. However, there are certain limitations which the small finance banks can't do. For example, they can't extend large loans, they can't float subsidiaries of theirs, and they can't deal in sophisticated financial products. So these are basically to give access to basic banking services to the greater public in the underserved and unserved areas of the country. Similarly, we have the payments banks. The payment banks, as the name suggests, only does the work of paying, that is the payments related work, mainly the transfer of funds related work. They are not allowed to give any kind of credit facilities, any kind of loans. So we can see that they can't offer the credit cards, or they can't extend the loans. Similarly, they are basically aimed to allow transfer of funds within the country, and therefore they cannot handle cross-border transfers, and they can't accept our NRI deposits. But they can offer the internet banking services, they can offer the mobile banking services, they can enable transfers and remittances through mobile phones. They can offer bill payment services for the customers. They can sell the mutual funds, insurance and pension schemes. They can have ATMs and debit cards, but they can't offer loans. However, they can raise the deposit of up to rupees 1 lakh, and they are required to pay interest on those balances just like the saving bank's account does. So this is the main difference between the small payment bank and small finance bank. The small finance bank can give the loan, but the payment banks cannot. An example of payment bank can be taken here is that Paytm. which offers the transfer of funds online easily. The through these banks, the RBI is targeting towards mainly the sectors, for example, the India's migrant laborers, the low-income households, or the small businesses, to get benefit of increased financial inclusions and more credit facilities to expand and enhance their business activities. So, with enrolling small finance banks and payment banks into Atal Pension Yojana, it will offer twin benefits. The first one is that it will boost the outreach of subscribers under this and will give India a pension loving society, that is inculcate the habit of saving among the Indian society, and it will also benefit to add as a sustainable fee income to the banks by way of attracting incentives by mobilizing the Atal Pension Yojana. They can charge some fee for availing these services by the subscribers. We have Pulse Polio program has been launched by Honorable President of India Shri Ram Nath Kovind, and it has been launched for the year 2018. Polio is a highly infectious viral disease, and it primarily affects the young children, and it could lead to paralysis and death. However, it can be prevented via immunization. Therefore, this Pulse Polio program is being launched, and the government is taking efforts to control polio in the country, but there is no cure for this disease up to this date. The aim of the Pulse Polio program is to sustain polio eradication from the country. We have achieved the polio free status in 2014, and under this particular program, more than 17 crore children of less than 5 years across the country will be given polio drops as part of the drive of government to sustain the polio eradication from the country. So, while we have been declared polio free in 2014, but to achieve this polio free status, we need to tackle a lot of challenges. For example, because a few years back, then 2014, India was home to nearly half of the global polio cases, and it was considered the most difficult task or difficult area in the entire world to eradicate the disease of polio, because of the sanitation challenges and the high population that we have in the country. But still, the India has achieved this feat, and it has taken care of a number of challenges. For example, the lack of funds and the lack of health workers to undertake the Pulse Polio program, but it has been taken care of, and door-to-door campaign have been also initiated by the government that made the health workers to go at the doorsteps of persons, households, and give polio drops to children below 5 years of age. Another problem that India tackled was the storage of vaccines, because they need to be refrigerated. The vaccines need to be refrigerated, and these vaccines must be kept in cold areas, in cold storage. But we didn't have, in India, we didn't have electricity enough to make them store properly, and also there are frequent power cuts. So in order to solve this problem of handling the vaccines, the India has come up with innovative idea like refrigerators being powered by kerosenes to get vaccinations to reach even the remote villages of the country, and to get being delivered to the children, and ultimately getting the polio free status in 2014. Another challenge for India was to campaign against the rumors and educate the people in favor of getting the vaccines, the polio vaccines. Especially the rumor has spread in Muslim communities about the polio vaccines that it made women infertile, and it is an initiative by the Indian government to curb the minority population in the country. However, this kind of mindset have been able to tackle, government has been able to tackle this with this false belief with the help of health workers and via a dialogue with the clerics. They were able to persuade the clerics and then their followers to allow the polio vaccines to be given to them and achieve the polio free status. As a result of our sustained efforts, we got polio free status in 2014. However, at world level, the disease incidence has dropped by more than 99%. But since 1988, but there are still 3 countries in which these polio virus or polio disease is still endemic, and therefore we need to be cautious, and we are still implementing the pulse polio program in 2018. In this we can see that how the red areas, which shows the high incidence of polio disease, is decreasing over years. However, still in 2016 there are 3 countries, Pakistan, Afghanistan and Nigeria. Pakistan, Afghanistan and Nigeria, in which there is still a prevalence of polio, and we need to take steps to avoid the importation of polio virus from these countries. Therefore, we are still need to remain vigilant and we need to maintain the immunity of the population and carry out surveillance till the global polio eradication happens, because polio virus is still circulating in other parts of the world which may infect us again. So we need to take this polio program forward until the entire world is polio free. So this was all for PIB summary for 26th to 28th January 2018. For more videos, you can visit www.edutab.co.in. Thank you and happy learning.